Have you ever imagined a world where you can use cryptocurrencies as effortlessly as swiping your card at a coffee shop? Well, this future may be closer than you think. Bank of America CEO Brian Moynihan recently dropped a bombshell, hinting that the bank is ready to dive into crypto payments once clear regulatory guidelines are in place. This could be the green light for cryptocurrencies to move from the fringes to the mainstream financial system. But while institutions like Bank of America are showing interest, there's another pressing question. Are there simply too many tokens flooding the market for this dream to become a reality? Today we're tackling these two massive topics: the potential for crypto adoption in traditional banking and the growing issue of token oversupply, which could spell the end of altcoin seasons as we know them. So if you're ready to dive deep into the future of crypto, smash that like button, hit subscribe, and turn on the notification bell. This is the channel where we break down the most complex financial topics so you can stay ahead of the curve. Let's start with the major news that has the crypto world buzzing. At the World Economic Forum in Davos, Switzerland, Bank of America CEO Brian Moynihan shared some powerful insights. He stated, "If the rules come in and make it a real thing that you can actually do business with, you'll find that the banking system will come in hard on the transactional side of it." He didn't stop there. Moynihan revealed that Bank of America holds hundreds of blockchain patents, meaning the bank is technically ready to embrace cryptocurrency payments. The only missing piece? A clear and comprehensive regulatory framework. Without it, integrating cryptocurrencies into traditional banking systems remains too risky, both for financial institutions and their customers. Now, why does regulation matter so much? Cryptocurrencies operate in a decentralized peer-to-peer environment, which is vastly different from the tightly regulated banking industry. Without clear rules, banks face potential exposure to fraud, money laundering, and consumer protection issues. Regulatory clarity isn't just a checkbox. It's the foundation that could allow crypto to thrive as a legitimate part of the global financial system. But here's where things get even more exciting. Moynihan's comments aren't just a one-off. They reflect a growing trend among traditional financial institutions to take crypto seriously. Over the past decade, Bitcoin and other cryptocurrencies have moved from being speculative assets to gaining mainstream and institutional attention. Companies like Tesla, PayPal, and Visa have already made strides in adopting crypto. Now, with Bank of America potentially joining the fray, we could see a seismic shift in how digital currencies are used. However, this brings us to the elephant in the room: the sheer oversupply of tokens. Crypto analysts are sounding the alarm that the overwhelming number of altcoins in the market could be killing the possibility of a sustained altcoin season. Let's break it down. Back in the golden era of 2017-2018, altcoin seasons were the stuff of legend. Cryptocurrencies like Ethereum, XRP, and Litecoin saw record-breaking gains, with some coins delivering 100x returns for lucky investors. Fast forward to today, and the story is very different. According to data from Dune Analytics, there are now over 36.4 million altcoins in circulation. Compare that to the fewer than 3,000 coins available during the 2017-2018 cycle. The market has become so saturated that analysts are questioning whether we'll ever see another true altcoin season. Economist Alex Kruger summed it up perfectly when he said, "Too many tokens, infinite more to come. Supply of tokens is greater than demand." This illustrates why expecting an alt season where everything goes up for an extended period of time is misplaced. And he's not alone in this belief. Crypto trader Ash Crypto pointed out that the market is being diluted by the proliferation of meme coins and low-quality tokens. Many exchanges are prioritizing listing these speculative coins to boost trading volume and attract users. Unfortunately, this often leaves retail investors holding the bag, down 80% on their investments within a week. So, what does this mean for the future of altcoins? Analysts predict that future altcoin seasons will be shorter and more selective. Instead of a market-wide rally, only a handful of high-quality, utility-focused projects are likely to thrive. As Ki-Young Ju, CEO of CryptoQuant, put it, "Only a few altcoin projects with strong use cases and narratives will survive." This brings us back to the role of institutions like Bank of America. If traditional banks begin to integrate crypto into their payment systems, they'll likely prioritize established and trusted coins like Bitcoin and Ethereum over the thousands of speculative altcoins. This could mark a turning point where quality trumps quantity and the crypto market begins to mature. Let's also consider the broader implications. Regulatory clarity, as highlighted by Moynihan, will not only make it easier for banks to adopt crypto, but will also help weed out low-quality projects. A well-regulated market could boost investor confidence, attract institutional capital, and create a more sustainable ecosystem. This would be a win-win for both traditional finance and the crypto industry. But the path forward isn't without challenges. One of the biggest hurdles is the fragmented regulatory landscape in the United States. While some states are adopting crypto-friendly policies, federal guidelines remain inconsistent. This creates uncertainty for both businesses and consumers, making it difficult for crypto to reach its full potential. However, there's hope on the horizon. Under the Trump administration, the U.S. took a more favorable stance toward blockchain and digital currencies. Policies aimed at fostering innovation could provide the stability needed for the industry to grow. By creating a balanced regulatory framework, one that mitigates risks without stifling innovation, the U.S. could position itself as a global leader in the crypto space. So where does this leave us? The crypto world is at a crossroads. On one hand, we have the potential for widespread adoption driven by traditional financial institutions like Bank of America. On the other hand, the oversupply of tokens and lack of regulation threaten to derail progress. The decisions made in the coming years will determine whether crypto becomes a cornerstone of the global financial system or remains a speculative niche. As we wrap up, I want to hear from you. Do you think regulatory clarity will pave the way for crypto to go mainstream? Or will the oversupply of tokens and market saturation hold it back? Let me know your thoughts in the comments below. And if you found this video valuable, don't forget to like, subscribe, and hit that notification bell. Your support helps us bring you the latest insights into the ever-evolving world of crypto and finance. Thank you for watching, and stay tuned for more exciting content. Until next time, keep exploring, keep learning, and keep innovating. See you in the next video.